Warren Buffett once said, if you offered me all the world's Bitcoin for $25, I wouldn't take it. By the way, that is a real box of $25 in pennies. I'm not crazy. Me and my kids have started going through boxes like this looking for collectible coins. In this box, we found 5 wheat pennies, which is pretty cool. And according to Buffett's hypothetical offer, these 5 pennies would buy me 42,000 Bitcoins. And yet he's saying that at that price, he wouldn't take it. This is a statement that has struck me as incredibly interesting and something that I think Bitcoin's founder, Satoshi Nakamoto, would actually agree with. Hi, my name is John Quast. Thank you for coming to my YouTube channel, Working Capital. On this channel, we talk about money stuff, but then it's also about taking action with what we have learned. In this video, we're talking about Buffett's take on Bitcoin and what that actually means for it in 2023, what we can take away. So first, I don't want to assume that you know who Warren Buffett is. According to Forbes, he's the world's 5th richest person with about $100 billion net worth. And what is really interesting to me about Warren Buffett is that he has achieved this by being a pure investor. Now you can say that yes, he's a CEO, but at the same time, he became CEO of Berkshire Hathaway through investments and then used that Berkshire Hathaway business, which was a textile business before he took over. He used that as a vehicle to become a big conglomerate, and that's how he's amassed his net worth. I don't want to take for granted that you know what Bitcoin is either, so let me explain. Like a currency, like the US dollar or the Chinese yuan, Bitcoin is a cryptocurrency. It's a currency that runs on crypto technology or blockchain technology. And as of this recording, there's about 19 million Bitcoins in circulation. There will only ever be 21 million when they've all been unlocked or mined, as it's called. And as of this recording, it trades around $17,000 each. That's the relation from the US dollar to Bitcoin. And that is actually down about 65% year to date. Now, Bitcoin over the last 5 years is still up, and over the last 10 years, it's actually up around 2,800%. This actually makes Bitcoin one of the best investments you could have made 10 years ago. And this takes us back to Buffett's original statement and why I find it so interesting. Here we have one of the greatest investments and one of the greatest investors, and he's saying that if you gave me all of the world's Bitcoin for $25, I wouldn't take it. The thing is, I think that Satoshi Nakamoto, the creator of Bitcoin, would actually agree with Buffett's reasoning. And I think that that's surprising for a lot of people. To understand Buffett's reasoning, you need to first understand the difference between productive assets and non-productive assets. So on the productive assets side of things, you have things like stocks, bonds, even a cash flowing rental property. These are all things that you can own that do create value over time. On the non-productive side of the assets, you have things like art, gold. Land is kind of an interesting thing because it can be both a productive and a non-productive asset. And this is one that Buffett actually talks about a lot. On one side, you have farmland, which is a productive asset. And on the other side, you have raw land, which is a non-productive asset. So if you own farmland, you can lease it out to a farmer and make some cash off of your land that you own. If you own raw land, you are not producing anything with it. You would have to sell it to somebody else for it to actually bring you money in. So it's a non-productive asset in that sense. This is why Warren Buffett would not invest in Bitcoin, because it's a non-productive asset. And here's specifically the rest of his quote. He said, if you gave me all the world's Bitcoin for $25, I wouldn't take it, because what would I do with it? I'd have to sell it back to you one way or another. What Buffett is describing here is what's known as the greater fool theory. If I hold a productive asset, I'm counting on that thing to create value over time. And yes, I could sell it to somebody in the future, but in the interim, it's creating value for me. On the non-productive side of the assets, what you are counting on is for somebody to pay more than what you paid in the future. And it could be based on nothing. It could be based on simply the speculation that somebody else is going to be the greater fool than you. Most people don't think of Bitcoin this way. They think of Bitcoin a lot like a stock. And so for most people, a stock price is just a set of numbers on a screen that go up and down, and Bitcoin looks the same for most people. However, owning a stock is owning a business interest in a company. You can buy stock in Apple and you own an economic interest in Apple. You also would get a dividend from Apple while you hold. Bitcoin is not creating anything, and that is actually a very true point that Buffett makes. This is where I think that Satoshi Nakamoto would actually agree with Warren Buffett's reasoning here. And so if you go to Bitcoin's original white paper, this is the document that was created by Bitcoin's founder to explain the whole purpose of Bitcoin to begin with, and it wasn't to be an investment. As we can see here in Bitcoin's white paper, it says that it's supposed to be a purely peer-to-peer version of electronic cash without a financial institution. It's also called an electronic payment system. Its purpose is to be a currency. Its purpose is to exchange value for goods and services. I can have some money in Bitcoin and give that to somebody else without a financial institution in between. Understanding Bitcoin's true purpose means that investing in it is no different than really investing in a different nation's currency, a foreign exchange. So, for example, it's not completely unreasonable to think that the euro would go up against the dollar over time. We've seen that the euro has been higher than the dollar than in the past. We've also seen that the dollar has spiked here recently. So let's say, for example, the US national debt is really high, and maybe you are looking at this as a person and saying, this is not sustainable, the dollar is going down because of this. It would not be unreasonable in that scenario to exchange some dollars for euros, assuming that the value of the euro goes up in relation to the dollar over time. I'm not necessarily saying that's going to happen, I'm just saying it wouldn't be unreasonable. In the same way, investing in a cryptocurrency like Bitcoin or even Solana or Ethereum, you're betting it goes up in relation to the dollar. You're essentially betting on the demise of the dollar in relation to these cryptocurrencies. Now, I should point out that not all what is called cryptocurrencies function in this way. There are some that I particularly like. One is called Theta. It's building this decentralized content delivery network. And another one called Arweave, which is essentially creating a type of permanent storage. Both of these things are programs, and their tokens, the Theta token and the Arweave token, are how this program runs. So those are called crypto tokens, and that's actually a little bit different fundamentally from something like a Bitcoin or a Solana, which is designed to be a replacement kind of electronic cash. You could choose to get paid in Bitcoin, you could choose to pay things in Bitcoin. That is all fine and well, and perhaps you want to do that. Perhaps you enjoy privacy, perhaps you enjoy having the middleman eliminated, perhaps you're a business who wants to get rid of hefty credit card fees, and so you would choose something like a Solana, which can be cheaper. All of that is fine and well, except that is fundamentally different from a productive asset. With a productive asset, it's creating value over time. With something like a currency, you're expecting it to appreciate in relation to another currency. So maybe you stuck with me this far, and you're going to say, John, yes, but Bitcoin has gone up in value over the last 10 years, and that's absolutely right. Why has it done that? Well, very simply, demand for this cryptocurrency has outpaced supply. This is actually something that's kind of interesting when you look ahead to Bitcoin in 2023. Right now, the price is holding steady at around $17,000. It is kind of up and down a little bit, but there aren't the fluctuations that we saw in, for example, 2020 and 2021. Right now, there's about 900 Bitcoins being mined every single day, and they're entering into circulation. And right now, the demand is such that it can absorb the selling pressure that's out there, plus these 900 new Bitcoins every single day, and maintain itself within this kind of range of prices. Every few years, though, the supply and demand dynamic get imbalanced. So we have what's called a halving event. Instead of 900 new Bitcoins a day being produced on average, which is about what it is right now, in March of 2024 or thereabouts, it's going to get cut in half to about 450 a day. And when that happens, there's going to be a lowering of supply. Assuming that demand stays steady, you would expect the price of Bitcoin to go up. This has happened several times over Bitcoin's history, and what's interesting is whenever a halving event occurs and the price starts to go up because of the reduced supply, this actually increases demand because people see the price going up and they think, I don't want to miss out on that. I want to get in on something that's going up, and so then they start to buy. It's an increase in demand. So we have a reduction of supply, increase in demand at the exact same time, and this creates explosive returns around the halving event. However, Bitcoin itself is not actually creating value like a company would or like a cash flowing apartment. It's just static. It's just a currency. However, supply and demand dynamics are pushing the price higher and higher in relation to the dollar. Given the fact that Buffett is right, Bitcoin is a non-productive asset, and given everything we've talked about, I would expect Bitcoin to actually not do very much in 2023. I would expect it to be more or less range bound around where it is right now for the foreseeable future, making it not necessarily a great investment in the coming year. That could completely change early 2024 when Bitcoin experiences its next halving event. I could definitely see it doing what it's done in the past, having that reduction of supply, sending prices up, and the prices going up, increasing the demand and sending prices skyrocketing. However, I think it's important for viewers to note that investment thesis, or why I think Bitcoin could go up in 2024, is essentially the greater fool theory yet again. That's been a little bit interesting as I've evaluated my own reasons for buying Bitcoin in 2018 at around $6,700 a coin. I essentially purchased with a greater fool investment thesis. I expected that this mania would happen over and over again around halving events, sending the price up and allowing me to sell my Bitcoin to someone else for more than what I paid for. The potential other investment thesis for Bitcoin is that you do believe that the US dollar is doomed, and you do believe that the Bitcoin economy, if you want to call it that, is set to grow over time. If that's your investment thesis, then yes, Bitcoin's value could go up in relation to the dollar over the long term. But it's important to understand before you buy why you're buying what you're buying and why you think it could go up. Are you investing with a greater fool theory, or are you investing with something a little bit more fundamental? Anyway, thanks for watching this video. If you found value, I'd really appreciate it if you'd like and subscribe to my channel. We'll see you in the next video.